Hello and welcome to another edition of Capital Market Live on Channels Television. I'm Will Ibongia in Lagos. First is first, let's check in on the markets. European markets, where we start with Europe, where stocks closed lower on Friday with investors rattled as countries impose strict measures to tackle the latest wave of COVID-19 infections. The FTSE 100 fell by 0.45%. The German DAX declined by 0.38%, while the French CAC 40 dropped 0.42% lower to close on Friday. Germany on Thursday announced more restrictions for unvaccinated people as a fourth wave sent cases to a record before Austria announced Friday that it would re-enter a full national lockdown. Austria's ATX index plunged 3.1%, suffering its worst day in more than a year. Meanwhile, European Central Bank President Lagarde on Friday reinforced a view that Eurozone inflation will fade and says the ECB should not look to tighten monetary policy as it could hamper the bloc's recovery. On the data front, UK retail sales increased 0.8% month-on-month in October, slightly exceeding economists' expectations of 0.5%. Now over to Asia, where Hong Kong shares fell on Friday, extending losses from previous session as some of China's biggest tech names remain under pressure. The benchmark Hang Seng Index declined 1.07% as Alibaba shares listed in Hong Kong dropped more than 10% after the tech behemoth missed revenue and earnings expectations for the September quarter as slowing economic growth in China weighed on results. Broadly, shares traded mixed across Asia Pacific. Mainland Chinese stocks rose. The Shanghai Composite added 1.13%, while in Japan, the benchmark Nikkei 225 dropped 0.5%. Now to the U.S. markets, where stocks struggled on Friday as concerns over a resurgence of COVID-19 weighed on global markets, though tech shares pushed higher. The Dow Jones Industrial Average fell 0.7%. The S&P 500 ticked 0.14% lower, while the NASDAQ Composite advanced 0.4%. The S&P 500 still ended the week 0.3% higher. A slew of stellar earnings reports from big retailers and strong U.S. retail data helped the broad market index fight heightened concerns about inflation and gave it a leg up when COVID worries emerged. The blue chip Dow fell 1.3% for the week, while the tech-heavy NASDAQ Composite got a 1.2% boost. Equities took a hit after Austria announced on Friday that it would re-enter a full national lockdown due to a spike in COVID cases that followed the new restrictions for unvaccinated people in Germany, introduced Thursday as a fourth wave sent daily cases to a record high. Now back home, bearish sentiments dominated local equities this week as the market recorded losses on 4 of the 5 trading sessions following profit-taking activities. Consequently, the all-share index declined by 0.12% week on week to settle at 43,199.27 points, with the month-to-date and year-to-date returns settled at 2.8% and 7.3% each. Notably, we said that the profit-taking in Total, GTCO, FBN Holdings, and Nigerian breweries drove the weekly loss. Activity levels were mixed as trading volumes declined by 4.8% week on week, while value grew by 33.4%. Now, sectoral performance was broadly bearish as all sectors closed in the red. The oil and gas down 3.63% was the biggest loser, followed by the banking, consumer goods, insurance, and industrial goods indexes. Vitafoam topped the gainers chart for this week. Its share price rose by 17.11%, while Qtix by 42.6% led the underperforming stocks. Now the trio of FBN Holdings, GTCO, and Sterling Bank contributed 45.85% and 30.63% to the total volume and value of shares traded in the week. Similarly, activities at the unlisted securities market closed negative this week as both the NASD OTC Security Index and market cap decreased by 1.52%. At the same time, NASD investors lost 9.51 billion naira and the market capitalization closed at 606.04 billion naira this week. Total volume of securities traded also decreased by 26.95% to 782,454 units, while value fell by more than 1/3% to 16.94 million naira from 25.83 million naira traded in the previous week. UBN Properties and Food Concepts ranked among the top 5 most traded securities by volume, while Niger Delta Exploration and Production PLC was the only advancer for this week. Meanwhile, UBN Properties, Friesland Campina, and WAMCO Central Securities Clearing Systems were the declining stocks for the week. Now let's see how the fixed income market fared this week. The bond market sustained mixed sentiments this week, with most of the selling concentrated at the mid-end of the curve. At the close of trading on Friday, the market closed on a mixed note. Overall, average benchmark yields closed at 8.44%, indicating a week-on-week rise of 1.53%. At the Treasury bills market, the Treasury bills market started the week on a quiet note, but activity picked up later into the midweek, and at the close of trading on Friday, the market was bullish, with selling interest seen across all maturities. Average benchmark yield for Treasury bills fell by 1.62%. Yields on the OMO bills fell by 2.48%, while yields on the CBN special bills dipped by 1.02%. Now, to dissect the happenings in the capital market during the week and other related issues, I have in the studio Mr. Adedeji Ajadi, a finance and management consultant and immediate past registrar of the Chartered Institute of Stockbrokers. Welcome and thank you for joining me on the program.
Thank you. I'm happy to be here.
Well, now, to start off, we're starting off with the equities markets. We've seen that it had a very bearish week. It was, well, not as much as, like I said, I expected it to perform. What would you say is this going to be the trend going forward? Are we seeing the end of the bull rally in the equities markets?
Well, like you said in the report, one of the reasons must be because of profit taking. You know, the way the market works, once prices go up for some time, some people want to take profit off the table. I'm sure that affected our market. And don't forget global issues also. We should not divorce it from our market. What happened last week regarding the resurgence of COVID-19, I mean, could affect some of the sentiments in the equities market as well, locally. So I think a combination of those factors must have resulted in what we saw during the week.
Okay, but interestingly, we also saw that Airtel Africa was up on Friday 0.22%, but that didn't help the benchmark index at all. It still fell 0.2% on Friday. What could have helped that? Airtel is a market behemoth. So.
Yeah, I agree. That shows you that even though the other smaller stocks actually fell a lot more, and so that the effect of the negative, you know, overshot the effect of the positive from Airtel. So generally, it just shows the bearish trend that happened in the market during the week.
So what would you say investors should look out for? As in, what should they do? Should they reposition? Should they take positions? Because the earnings season, dividend is going to be paid very soon. You know, we're entering the fourth quarter, and you know, people are positioning themselves for that. So what would investors, are they going to be investing at this, seeing the bearish movements that's going on right now?
Absolutely. Every time there's a pullback back in the market, it presents opportunities for discerning investors to reposition themselves, look for stocks with very strong fundamentals, and wait in there for the returns that will soon come. Again, you mentioned very correctly, by the first quarter of next year, and it's not too far away, the earnings seasons will come, dividends will be declared, the fourth quarter result will be declared, and so that's when the bumper harvest really comes. And I think this is the time for people to look at good names, strong fundamentals, position themselves now, take advantage of the drop in prices and position themselves.
So basically buying the dip.
Buy the dip, absolutely.
So we're talking about buying the dip, but we're shifting to equities. We're talking about the unlisted market now, the OTC, that's the NASD market. We also saw that they had a very negative performance. The index dropped 1.52% for the week. Are we saying that what's causing the pullback in the market there? We saw a drop in the volume of transactions, also in volume of deals, really not encouraging, not very, I don't know, for people who don't know much about the NASD market, would they want to come in? with such numbers?
Yeah, similar issues. Don't forget, it's also an equities market. The only difference is that the shares are not listed on an exchange, and so they are traded on the OTC market. So any factor that affects the listed equities will also equally affect the NASD OTC. In fact, I will be shocked if you see a different trend in the NASD compared to what you see in the NGX, because the two of them are equities market anyway.
So how would you assess the performance of the fixed income market? You saw that the treasury bill market closed bullish, the bond market was mixed. Performance was just mixed across the curve. How would you assess the performance there? Are you saying that investors are still bullish on bonds? Because I know there was an auction this week. So what would you say? How would you rate the performance, and how would you rate investor sentiments in the market?
The trend in recent times has been that in the fixed income market, rates yields are gradually coming down, and what that would do is that it will incentivize sellings, because prices will now rise, because the prices of bonds or fixed income instruments and their yield, they go in opposite direction. So when yields are dropping, prices are rising. That's what you see in the market. But again, what will likely happen is that what is happening in the bond market will affect what will eventually happen in the equities market. Because if the yield continues to drop, it will be more attractive to be in the equities market rather than the bond market. So the trend we are seeing is that yields are going down. It will likely catalyze the equities market a lot more. If that trend continues in the next couple of weeks.
Oh, you're still talking about equities, but this time we're moving to acquisitions. And recently we saw that Nestle South Africa has just, that's the parent company of Nestle Nigeria, has just increased the stake in the Nigerian subsidiary here by, this has acquired about 4.9 billion worth of its shares in Nigeria. What do you think of this positive? Is this a positive development to the markets?
That's what I see, because it shows confidence. If the parent company is increasing its stakes in the local company, it shows that they are bullish about Nigeria. They believe that the Nigerian economy still has a lot of opportunities for growth, because nobody will invest more when you think you won't have a. So it is positive for the Nigerian economy. And especially if foreign companies see that, that should give those of us locally much more confidence in the economy. And again, we saw a confirmation of that in the growth in our GDP, which we saw last week. 4.0 apparent growth, showing that we are recovering fast and that there are great potentials for the economy for the future.
Also, we saw Rain Oil, Eternal Oil acquisitions are just taking place in the oil and gas sector. What's really making this merge? It's not mergers and acquisitions. What's really happening in this space? Because we say that recently, Eternal and Adova, Adova has just acquired Enyo, and Eternal acquired Rain Oil. So what's happening with the acquisitions? What's causing all these buyovers?
I think we will see a lot more of that in the oil and gas sector. Because of the recent Petroleum Industry Act that has just been passed. Okay. That appears to be catalyzing investment in the oil and gas industry, and it's likely we are going to see more of that going into the future, because what that does is that it gives us more, a better idea, stability. We can look at the trend in that industry. The structure is now clearer in terms of the regulations, and then that will catalyze more investment in that industry, because people see opportunities there and want to position. And when you do acquisitions and mergers like this, it shows that you want the company to be stronger, to be able to take advantage of investment opportunities in that industry. So it's a positive development for the shareholders of the two companies, because you now have a bigger company with more financial muscle to be able to invest in that very attractive industry, oil and gas.
Thank you so much. We'll take a short break now. When we come back, we'll continue the conversation, and that's in a moment. Do stay with us. This is Capital Markets. Welcome back. If you're just joining us, this is Capital Market Live on Channels Television. Now, we're still on investors understanding about the markets, mergers, acquisitions. The NGX during the week organized another training for retail investors on the subject of creating an investment portfolio that works in the post-COVID era. So, Mr. Adedeji, what are your thoughts about this? Do you think that the Nigerian exchange is doing enough for retail investors out there? Are investors well informed about the market and how to invest in it?
Good question. Investors' education is a very big issue, very important issue, critical in this market. I want to commend the NGX. In the last couple of years, they've done a lot in that area as a market platform. The Charter Institute of Stockbrokers does a lot of that as well. And I think all the players need to do more, because one of the gaps in the market is lack of knowledge, lack of capacity, lack of understanding of the market. When you go around, people show a lot of lack of awareness. What are equities? Basic things are shares. A lot of people don't know about it. So we need to do a lot more. All the stakeholders in this market need to work together to ensure that we pass the information out there for investors to understand what this market is all about, the opportunities in the market, the risks in the market. Because we see a lot of Ponzi schemes, a lot of charlatans coming to the market, succeeding in mobilizing billions of money from the market. Investors don't know. They don't even know when they see a real investment from a fake one. So what do we need to do? We need to tell a lot more about the story of the capital market, let people know what they can do to protect themselves, what kind of investment they need to put their money into.
That's really correct. But you just mentioned the Chartered Institute of Stockbrokers' contribution to investors' enlightenment, and just recently, your institute, organized the 25th annual conference. What would you say are the key takeaways from that conference, and how would it impact, the economy?
Yeah, let me just give you a little background. The Institute does this all the time. Once in a year, we bring ourselves together, all the stakeholders and members, to talk about the market. So we look at the germane issues about the market. The theme of this year's conference was how to use the capital market as a catalyst for economic development and sustainable growth of the economy. And that's the real question we all need to ask ourselves. The market is a platform that we should use to drive the growth of this economy and the development of this economy. So we talked about that. And key issues that we discussed include the issue of fintechs, which are the growing trends all over the world, financial technology company. We need to develop that to bring our young ones into the market, because they are on the platform, they are on the phones, they are on their devices, and they are not yet attracted to the Nigerian capital market. We need to bring them to the market. We talk about Petroleum Industry Act, which I mentioned earlier before. We talk about MSMEs, crowdfunding, very, very germane, practical issues in the capital market affecting investment.
It was just also during the conference, the SEC, that's the Mr. Yuguda, the DG, Lamido Yuguda, emphasized the importance of monitoring and sanctioning erring, retail investors or violators. I mean, operators in the market. How do you think they're going to go about this when you talk about fintech? What measures have they put in place to ensure that they're able to curb Ponzi schemes and Ponzi schemers, so to say?
For me, the primary responsibility of SEC is to ensure a market that is safe for investors. They are the #1 regulator in that market. So what SEC needs to do a lot more of is about this monitoring, surveillance, to ensure that, #1, any security that is not registered by SEC does not operate in the market. Operators that are not registered by SEC cannot operate in the market. That has been prevalent over the years, unfortunately. Secondly, even those who are registered, they must follow the rules. They must live by the principles of the capital markets. SEC has rules that must be followed. And there are standards, ethical conduct, professional standards that all operators must work with in the market. Anybody who is violating any of those should be sanctioned appropriately. So we need to sanitize this market. And that's a critical issue for SEC. And SEC is doing that, but we need to do a lot more of that.
So now you talk about the contributions of the capital market to the economic growth of the country. But we're seeing also that one of the ways that the capital market has probably benefited the country is true. We're hearing about the Sukuk bonds. The DMO recently announced that they're planning to raise 250 billion naira to fund road projects, critical infrastructure projects in the country. And this is not the first time they're doing it. It started in 2017. And we're just saying, do you subscribe as in, but first of all, before we do that, also recently, the Minister of Works and Housing, that's Mr. Babatunde Fashola, Raji Fashola, he talked about the budget and how they're going to fund the projects that they're going to do. But he was speaking to my colleague, Maokwe Yusuf, on hard copy about this, and we're just going to take a listen to what Mr. Fashola said on the track.
Many funding options. We have the Sukuk, we have the tax credit scheme, we have the Presidential Infrastructure Development Fund, and we're still looking at many other options.
They're not captured in the budget, are they?
They're reported. They're reported and accounted for, but the budget is only one option.
So we can see that Mr. Fashola was talking about the different options that the ministry had to raise funds, and the Sukuk sovereign Sukuk bond was one of them. Do you subscribe to this kind of funding?
I absolutely subscribe to it. Number one, the government needs to do a lot more using the capital market to mobilize those long-term funds. I think that our capital market has more capacity than we know. So we can do a lot more. And when you do that, you are also activating interest in the capital market. More people will get to know more about the market, the opportunities they are in, pull funds out of there. And more importantly, even the projects that are being financed, because of the transparency of Sukuk, there is monitoring. They are always tied to particular projects, so it can be monitored. Ministries, agents, and departments that are relevant to those areas always do inspection, DMO, send reports on that. So you can really check that as this project for which these funds were raised, have they been implemented? And that is one of the reasons why this government has done quite well, I believe, in the area of road infrastructure, because they've used Sukuk to finance most of these road projects.
So could you break down some of these projects that have been done and that probably have been accomplished, maybe finished from start to finish, or just give us a summary of if the government has really achieved much? Because the first time they issued it was 100 million. They started with 100 million. And the second time, in 2019, was another 100 million. 2020 was 162. Now we're saying the highest is about 250 billion naira. That's a huge sum of money. It's a lump sum of money. How would you say? Would you say that it would be well utilized? What have we done in the past? What is a track record of what's been used in the past? Oh,
I think there are publications out there. DMO sends reports on inspection of several of these projects. I know I've read a couple, about two of that over the years. The 2017 project, Benin bypass, they mentioned a number of Kaduna, something in Kaduna, all across the country. Projects are listed that have been accomplished using this Sukuk bond. So the transparency of this is not in doubt, and accountability that goes with it. And that's the real attraction for me. It used to be the big problem in Nigeria before, because projects are done on the paper. In real life, they are not there. But this one with Sukuk is difficult to do that.
He did say that the Sukuk bond will be for some priority projects, talking about roads leading to ports or maybe to railways that are transporting goods and services. Yeah. How would you say that? Do you think it's achievable? And you also said that there's a deficit. There's already their own contractors. How do you think, is the Sukuk bond enough to carry this?
Yeah, that's part of why. I think it's more to augment available funds already. They said the funds are not sufficient. So Sukuk is supposed to further augment what already exists. So it's going to augment the project. Of course, I'm sure the Ministry of Finance and the Ministry of Works, they will have done their analysis and their budgeting to know that it will do that. But this is the way to go. We need to be pragmatic about financing our projects in Nigeria, not only to just get money, but to see practical delivery of these projects.
Mr. Deji, thank you so much for your insight on the program today. It has been an interesting one. Many thanks for coming on the program. Mr. Deji is the is a financial analyst, is a financial is a finance and management consultant, and is also the past registrar of the Chartered Institute of Stockbrokers. Many thanks again for joining us on the program.
Thank you very much.
That's a wrap for the program. To join us next week on Capital Market, I'm Willie Bong. To have a lovely evening.